What's up, guys? It's Morgan from Lynchpin. Today I'm going to be talking about Zillow and an update based on a prior video that I did, as well as the stock play associated with it. So let's get into it. Zillow gets outplayed at its own game. Now, Zillow came out and just basically admitted they've overflipped. Now, in my previous video, I went on to Zillow itself, looked at Zillow Owned homes, and the company had just turned a profit, but they had also purchased a record number of properties. Well, suddenly, as the market has actually kind of cooled on housing, I saw that there were a bunch of these homes that, let's say they had purchased for $430,000. They then turned around like 2 weeks later, put it up on the market for $460,000. Well, a lot of those homes didn't actually end up selling. They tried to overextend the market. Then you see 6, 7, 8 price reductions, and suddenly these homes are listed for $20,000 or $30,000 less than what Zillow purchased them for. So they really just got over their skis, so to speak, on it. And I find this interesting. Zillow's comments on this are basically, it's beyond operational capacity in the Zillow's offer business. I find this kind of weird, because that's like the excuse is essentially their algo is too efficient. And so now they're focused on getting with real estate agents to try and move this inventory, reduce it for them. Here's my thought process. I've talked to so many people in regards to the housing market. I'm no expert. I'm not a real estate agent. I'm not a financial advisor. So take it with a grain of salt. But I do have friends, family, and other people that I speak to on a regular basis in different parts of the country, some of them in the hottest housing markets out there. And they've all said the same thing along the lines of, this has gotten crazy. I can't even afford the neighborhoods that I live in and all of that. And now it seems that despite record low interest rates, despite record low inventory, that's now starting to shift again. It's now starting to pull back a little. Do I think it's going to crash like 2008? Not necessarily, but if you combine that with a stock market crash, a crypto market crash, some of those things, I think there's a lot of potential for some huge drawdowns to happen. But I'm looking at it as a more conservative, like it's still going to drop probably 20 to 40% at some point. And keep in mind, the housing market's slow. Okay, it doesn't move like the stock market and can drop a ton in a day usually. One of the other interesting things, I love that the article points out, like Opendoor and Redfin and some of these don't seem to be nearly as affected, but Zillow got over its skis. Now keep in mind that they've all been kind of shifting to this. They all kind of have these iBuyer programs in competition with Zillow. Now, while I'm positive that there is going to be some money flow to Opendoor, I would still argue that while real estate is localized and while I think there's a lot of opportunity still that it might take some time for it to drop, I'm still skeptical that we're not going to see an overall market issue, and therefore I wouldn't really be long on the competitors. I personally am playing it short on the housing market, essentially through something like Zillow, because of the mismanagement involved. The reality is that iBuyers have incredible amounts of market data, can plan acquisitions and inventory months in advance, and have a number of levers to pull to slow or accelerate the business. Now, basically, this is kind of the excuse that, hey, Zillow's got all this data, they're going to be all right. I kind of disagree with that because of the fact that Zillow doesn't control the overall market. They can contribute to it, but they've kind of become a victim to it. Now, I also, again, because I think that we're kind of in this everything bubble, that once one of the cards in the house of cards falls, I think they all start to fall. And so that's the way that I'm playing the stock. So let's talk specifically about what I'm eyeing on the option side to continue to play this move. All right, in Zillow's option chain, I'm looking at 3 different opportunities. I don't think anything before middle of next year is really all that attractive. If I did want to gamble, I would probably say that I would probably go for the January $70 puts. I'm focused in that 70 range. If you look at the chart, that's kind of a support and resistance level. And I think where Zillow's kind of getting a bounce, they're not as oversold as they've been in the past from this news. But when 3/4 of the revenue comes from the iBuyer program, I think it's important to say that, hey, if they're putting this on pause and trying to move inventory, and if I really think that, the housing market's overextended to where buyers are going to dry up, then my thesis is that, there's going to be a significant downside, probably to that 65 range is where I'm kind of looking. So if I were to try and gamble on it, I'd probably do a couple of them in January. So I'm ignoring 2024 because I don't think we're going to last that long. I don't care what the Fed does or doesn't do. Me personally, I'm looking at the middle of next year, 2022, and the beginning of the year, 2023. Both would be 70 puts just because I like the value there, what's required on them, and just kind of the volumes associated with them. So me personally, I think what it would probably end up being is, a half and half scenario where it's like, okay, let's do 5 of the middle of 2022, 17th June 2022s, and then 5 more of the 20th of January 2023s, and just kind of accumulating over time. If I start to see more volume exiting, then I could add to that position. If it seems like, it's not really happening, housing market rebounds and all of a sudden reaches new highs, maybe that's something to look at. But for me personally, that's how I look to play it. And that's basically the situation that Zillow gave us. So for the too long didn't watch crowd, or anyone who sat through listening me drone on, Zillow overextended already and has to stop their iBuyer program for the Zillow offers, buying homes from people and then reselling them, because they were contributing to a lot of these crazy home prices by buying something for $430 and then turning around and attempting to list it for $460. Make a quick flip of it, and it didn't work out. They bought a record number of stuff. They had just profited that the prior quarter, and I think they're going to get hit hard. And especially if you see an overall, market downturn, people aren't going to be rushing to companies like Zillow, these overvalued tech companies that now have physical assets. I think people are actually going to turn back to consumer staples and, more value stocks, in my opinion. Again, take it with a grain of salt, but that's what I see. That's what I'm playing. What are your thoughts? What are you seeing out there on the market? But again, if you want to check out my original video in regards to this, so you can see, again, what my thesis was and where it is now. And unfortunately, I was kind of right. They had gotten overextended, and now they're actually openly admitting it. And one thing I want you to keep in mind is if they're openly admitting it, it's pretty bad. So anyways, thanks for stopping by. Hope to see you again real soon.